Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Edelweiss is the stock in focus once again. It's a company which has seen it's been a big multi-bagger over the last 2 years and continuing to expand, now buying Religare Securities business. Rashesh Shah is with us, chairman, of course, of Edelweiss. Rashesh, good morning. You know, I know your penchant for expanding, but what was really so exciting about Religare's business that you bought it?
Actually, it's a good business. They have a fairly large client base, more than 1 million customers, and it actually is a very good strategic fit with our wealth management business, because as you know, the mass affluent wealth management is one of the fastest growing segments, and we are the leaders in that. And with this acquisition, we will almost triple the client base that we have. So for us, it's a very strong strategic fit in an area where we are already in leadership place, and this will strengthen that. And it's a very high quality business, but needs investments in technology and product and client.
Sure, but Rashesh, you know that clientele is mostly in securities business, and I think which is we were speaking to Nitin. He said the focus would be to generate wealth management business out of that. Do you think that transition is going to be easy?
Actually, that is what we did. If you remember, a few years ago, we acquired the anagram brokerage business.
Yes.
And did the same thing. Basically, I think brokerage business is getting converted into wealth management business. And to convert that, you need product, technology, processes, people, all of that. And we have already made that investment when we did the anagram transition from broking to wealth management. And this is actually the same but now we already have the package. So this will be an easier plug-and-play for us.
Okay. Well, we're just getting you pictures of the BJP parliamentary meet where the PM will address the party MPs. We'll get you the speeches when they start. At the moment, it's just about to begin. Those are just live pictures that we're getting you. Rasesh, good morning. You know, what kind of an ROI, or return on this investment, are you expecting?
It's a function of, how much we can expand the other products and all that. But to give you an idea, we currently have a client base which is about half of what they have. So we are tripling the business.
Okay.
We are paying almost about 100 crore premium for that. They have 150 crore net worth, and we are paying 250 crore. So effectively, buying the business, the client and everything for about 100 crores. We expect that in 18 months or 2 years, we should be able to earn this back.
Okay.
So through the product portfolio and the platform that we have.
Okay. Well, Rasesh, since we have you with us, you have this extraordinary ability to pick up stressed assets. What is your sense about the NCLT? Do you think the steel assets will be picked up without too much of a haircut, or will they be over 50%?
I think it will vary from asset to asset, but the larger steel assets, I think, are very highly coveted. And my expectation would be at least 50 to 65% range for a lot of those.
Okay.
And I think that will be a fair deal, because the replacement cost of these assets is very high. But obviously, it won't only be, replacement cost will not be the only factor. People will also look at earnings power and fresh investment required. So I would think about 50 to 65% for individual assets in steel sector will be a good buy for many people.
Rashesh, how big is this pie? You know, these numbers have been mind-boggling. I remember when I did my show with you and I asked you, these numbers have become 10 times over the last 2 or 3 years. And you said, these numbers will keep surprising you. I'm talking about, the overall wealth management book. I'm talking about the way some of the domestic savings are getting into stock markets. So, have you done any sort of analysis in terms of how much further they can grow in terms of a CAGR?
See, currently the entire wealth management piece in India is still very small. Our estimate is it's only about $250 billion. By 2025, we think this will be 4 to 5 times the current size. It is growing at 20 to 24% CAGR per annum. Take that, and actually that is what it has grown in the last 10 years also. So if you just extrapolate that, I think by 2025, when India becomes a $5 trillion GDP, total wealth management assets should be at least about $1 trillion. So we're seeing a 4x jump from here.
Okay, that's substantial. And again, since we have you with us, what's your thought on this huge rural rush that we are seeing? Good theme to play?
I think so. I think the government's commitment to double farm incomes by 2022 is a real commitment, and I think after the recent elections, it is very clear that there is a large part of India which also needs to be taken care of. So I think rural investments will go up. I think government's focus on rural programs will go up. And this is not new because this has been going on for last year. The rural distress, I think government has realized that rural incomes have to go up. And we have seen that if you speak to companies in FMCG sector and all of those, they are seeing a fairly good demand on the rural side. So I think rural will be a good theme.